Hey folks, Brian Smith with Vantas Commercial Real Estate. Standing here in my home. I grew up on a farm and I feel right at home in the middle of a cornfield like this to talk to you about land. We're going to talk about development land as well as farmland. And to start off with development land, the pros and cons to developing ground. The biggest pro is the margins. There's potential for very, very large profits when you're doing land development. You're buying the land by the acre and selling it by the square foot. Now, having said that, there is also quite a lot of risk that is associated with land development as well, and we'll cover that in a minute. Another pro to land development is if you're in the commercial real estate market in an area and you see a need in that market, you do land development, you have the ability to fill that need. You may even have multiple people that are interested in purchasing the product that you're going to create before you even break ground. And so there is some control from that standpoint. And the last pro is that there is a very high barrier of entry and there isn't a lot of competition when it comes to land development. Now, on the flip side, that is also a con. It can take a lot of money to even do a small land development. It's not uncommon for a small land development to cost $1 to $2 million. And another con to doing land development is that you really don't see a profit until you're selling off the last few lots in that development. Everything is expense on the front end of the land development. You need to purchase the land, and then you have to grade it and get it prepared for the development you're going to do, put in streets, water, sewer. All of those things are expenses on the front end before you can even start getting any of those expenses recouped back. That's why there has to be such large margins in development to entice someone to take on that kind of risk. Back in the mid-2000s, when we were seeing a lot of people getting into development, they were making a lot of money during the housing boom. And the problem was when folks got caught in a situation where the demand for their development evaporated, all of a sudden they went from multimillionaires to bankruptcy because they couldn't generate any cash to be able to support the debt that they had in place. That's another con to development. The properties produce zero income. There's no rent on a development property. You only generate money when you sell lots. Another con with land development is that it can be quite stressful. When you have a large amount of money laid out on a property and you aren't able to generate any income until you start selling off those lots, you can get a lot of pressure from your lenders, from your family, and you have to be able to weather that storm. You have to be able to be patient and wait for the right opportunities and make wise decisions about how you go about doing that development, how you go about developing that land in order to be able to minimize your risk to some extent. And there is a very long time before you see that end high margin return that you're looking for. Now, I also want to quickly talk about the pros and cons of farmland and owning farmland as an investment as well. One of the pros is that you literally will never have a vacancy. There are farmers waiting in line to try to rent the ground that you own. And so you don't have to worry about going a year where you don't get any rent. That's not an issue. Another pro to owning farmland, if you have a farming background or if you understand the ways that you can go about improving land, you can buy a piece of land that maybe has some problems associated with it and go in and fix those problems in one way or another, whether it be through drainage or adding irrigation. But you need to know what you're doing in order to be able to make improvements to ground. That's extremely important. A con to owning farmland, especially when you don't have a lot of experience when you're associated with farmland, is that you can end up having unrealistic expectations of the return on investment. In commercial real estate, it's not uncommon to see a 6 to 8, and maybe with a very profitable investment, as high as a 10% return on investment per year. Farmland, it's very common to see a 3 to 4% return on investment in most situations. Another con associated with owning farmland is that you can have expectations from your tenant or your renter. If there are problems with the land, they can expect you to make those improvements. And if you don't have that understanding on how best to do that, it can end up causing friction between you and your tenant. And another potential issue or con to owning farmland is that even though you have many potential tenants that are more than happy to rent the ground from you, if you don't make a commitment to your tenants to continue working with them longer term, they can end up treating the ground in a way that does not sustain the value of the ground long term. They can end up not putting any fertilizer down on the property and keeping the fertility levels up. They can end up not managing the tillage of the ground in a way that is sustainable long term and prevents erosion and those types of things. So from one standpoint, farmland is very easy to manage because it's just bare ground and you rent out that bare ground. But from the other standpoint, if you don't know exactly what your tenants are doing or the approach they're taking to farming that ground, it can end up being a long-term issue. Now, if you'd like to talk more about land development or owning farmland as an investment, I'd be happy to get into all of those subjects in more detail. Again, this is Brian Smith with Vantas Commercial Real Estate.